Hey, and thanks for joining us for this timely presentation today. Look, I know it's an important topic. We've been getting flooded with questions like, how will Trump's next presidency impact my retirement savings? And what can I do now to prepare for it? And look, these are just some of the critical questions that we're going to tackle today on the presentation here to arm you with the most important information to make informed decisions. Now, I see we still have a few people are starting to log on, but I'd like to go ahead and get started because I would like to get through this as quickly as possible for you. So I want to be clear from the beginning that I'm not here to have a political conversation. This is a conversation more about your money and your investments and what that impact is with, President Trump coming in for the second term as President of the United States, no matter how you voted. So today, we're looking forward to seeing what President Trump, what are some of the policies, how could those policies impact your retirement savings? And I'd like to start, taking a look at, are there potential problems, that we could be facing that could impact your retirement? What are some of the potential deep problems that the new administration may be inheriting and what they have to deal with? Plus, we'll get into the opportunities and the risks that could come from some of the Trump's policies proposals. So stick around, and by the end of this presentation, you're going to be armed with the information that could help you make more informed decisions about your retirement savings and your investments over the next 4 years. So this is a quick disclaimer here. And as I mentioned, the new administration, they're facing some important challenges. Now, there are structural issues that will need to be addressed to ensure economic stability, including problems inside of Social Security and Medicare. And these problems could have an impact on anyone that's retired or nearing retirement. So let's take a look here. First, according to the Wall Street Journal, they said Social Security could become unable to provide full retirement and disability benefits to Americans in 2035. That's big problem number one. Social Security is on track to run out of money in less than 10 years, and your benefits could be on the chopping block as well. But it's not just Social Security. Medicare is having trouble too. They're also set to run out of money just 1 year later in 2036. So look, this can be bad news, but we're looking at plans on how to address this. So you've been contributing to many of these programs like Social Security, over your entire working life. And the last thing that you need to do is lose critical income and medical coverage that you were counting on for your retirement. And unfortunately, we're just getting started. The next big problem is our rising national debt. By late 2034, the federal debt will top over $50 trillion. Now, these numbers are coming from the Congressional Budget Office, and that's reported by the Tax Policy Center. Look, we all know it. Our national debt, quite frankly, it's out of control. It was $25 trillion just in 2020. And within a decade, we're pacing to double that. So debt can definitely be bad news, and the deeper you dig, the worse it can get. And let's not be mistaken, it's you and it's me. It's the taxpayers who are on the hook to pay this money, not the government. We are, right, being the taxpayers. But if you think we can easily fix this just by cutting a bunch of government spending, well, think again. According to the Congressional Budget Office, only 15% of the final 2023 federal budget was classified under non-defense discretionary spending. 2024's final numbers probably won't be much different. So that's less than $1 trillion per year. So we're sinking $1.5 trillion deeper into debt every year, even if we cut all the discretionary spending. That's not going to close the gap. So where's all this money being spent? Well, nearly 70% of the budget is committed to untouchables: Social Security, Medicare, Medicaid, defense, and interest on our debt. No matter how much you want efficiency, it's not easy to cut government spending unless you're willing to break a lot of the promises, including those to retirees. Now, One more big problem we're facing today, and I'm sure you're feeling it too. Prices are sky high on everything due to nagging inflation. Now, admittedly, inflation is trending down, which is great. It's under 3% today. That's a great number that the economists are talking about, but that's probably not what matters to you. What matters to you, what matters to me, is everything we're paying for right now. Prices are up nearly 25%, even since January 2020, 25%. So even if we keep inflation under control, and that's a big if, everything that you buy has been repriced. Everything costs more, a lot more than it did, right? And you shouldn't expect prices to suddenly drop on the things that you buy every day. So President Trump, he's taken on some significant challenges. Social Security and Medicare, they're both in trouble. Our national debt continues to rise. The government's budget is nearly impossible to cut. And inflation is reducing your purchasing power. And one of these could be one of them could be a serious threat to your retirement, correct? But when you pile all these on top of each other, what does that look like? It's compounded. The bad news for all of us is there's no easy fix. So that's where we're heading today. Now, coming up in this presentation, we're going to dive into the Trump policies. We're going to look at what could be good for your retirement. And more importantly, we're going to cover important changes that you may want to make and how can you change to adjust your plan to keep up with those changes. At the beginning of a new Trump presidency, we're going to look at all these different things. But before I do that, allow me just to kind of introduce myself quickly. Again, I'm Anthony Pellegrino, founder, CEO of Goldstone Financial Group. And who is Goldstone? Just a little bit about us. We've been recognized for many years as a 5-star wealth manager by Chicago Magazine. My colleagues and I are regularly featured on both regional and national TV, radio, print. Our main headquarters is right here in the Oak Brook area of Illinois. We've got offices all throughout the Chicagoland area, throughout Illinois, Tennessee, Wisconsin, and Ohio. But what's most important to me are the tangible differences that our team is making every day in the lives of the families that we serve. Now, over the years, we've helped thousands of area families make better informed decisions about planning for their retirement. And today, my goal is to do the same thing and help you do the same thing. So I want to help you make informed decisions that can help your money go a lot further in retirement. So let's dive in. First, let's look at where the new Trump presidency could, be especially good for your retirement. Well, let's start with tax cuts. So, folks, the initial Trump tax cuts, those were passed in 2017. And those are actually set to expire at the end of this year, 2025. But with the start of the Trump second term beginning here, we're highly likely, we're hopeful that they will extend these tax cuts, at least in some shape or form. So it's anybody's guess to know exactly what this will look like, but it could help you be in a position to save even more in taxes as part of your retirement planning. Now, we've been recommending for our clients to convert their traditional IRAs and 401ks to Roths to take advantage of today's lowest tax rates in 40 years and how you can reduce the taxes on your investments throughout your retirement. And if those tax cuts get extended, well, great. That could give us a few more years to spread out tax planning moves just like this, which could lower your taxes even further. Now, this next one has a big question mark. President Trump promised to eliminate taxes on Social Security benefits. Now, if this happens, it could keep even more money in your retirement accounts. But as Barron said, quote, removing taxes from Social Security benefits is likely to be impossible. The first reason is financial. This move could drain Social Security trust fund even faster than it's projected now. And the second reason is procedural. There are rules in place that make it hard to make changes like this to Social Security. So again, this one comes with a big question mark because it could benefit you if that is to happen. And then there's the stock market and your investments. Now, President Trump is decidedly pro-growth. He wants American businesses to make a lot of money. Now, this helps everyone with the economy. Stocks could climb as a result of this. During his first term, the S&P 500 climbed 67%. And that's after the dust settled from the pandemic crash. Now, if you take a look at this disclaimer here, past performance is not indicative of future results. That does apply to presidents as well. But you're not going to catch us sitting on the sidelines here, okay? Next, let's go ahead and dive into some of the risks associated with the policy proposals that we've seen. Now, the first risk comes with tariffs. President Trump has promised. Now, look, we don't know exactly what those are going to be until they happen, but tariffs could be inflationary, at least in the short term. Now, the goal here is to support American businesses, and that could be a great long-term effect. But in the short term, Barron says Trump's tariffs would effectively be a significant tax increase. A 10% tariff could cost the average household $1,800 per year, and higher tariffs could cost more. Again, purely speculative here. They don't know. He also said he could offset them by lowering taxes elsewhere to offset that. If not, that could be, even more money in your pocket if there is an offset. Next, Trump's tax plans could also help expedite draining Social Security and Medicare's finances even quicker. It's not just taxes on the benefits. Less taxes paid across the board could end up draining the trust funds sooner. According to the Wall Street Journal, Donald Trump's proposals would accelerate the date from fiscal year 2034 to fiscal year 2031, when Social Security is already pacing to run out. Now look, that's putting us on a pace 3 years sooner to run out than the automatic benefit cuts would be in play currently. And that's not just Social Security and Medicare. Tax cuts are great, but they must be offset by spending cuts, or else the debt could grow faster during a second term. The Committee for Responsible Federal Budget analyzed all of his policy proposals together. They found President Trump would add nearly $8 trillion to the projected debt through 2035 under a central estimate. Now, I hope this is an overestimate, but I know that we don't want debt. And finally, there's interest rates. President Trump wants to lower rates because it can be very good for business. This could be great. That's good for borrowers as well, especially for big purchases like homes and autos. But when you're retired, higher interest rates give you more income, right? For reliable, steady, secure income. So the risk for your retirement plan is that if they lower rates, which could happen, it could reduce your retirement income as a result. So with the big changes that we could see with the second term here, how does this change the way you plan for retirement? Well, the first big change is you may get another shot at some powerful tax planning opportunities. Most people don't realize it, but taxes will likely play a much bigger role for the next wave of retirees than in any previous generation. Taxes will likely be your biggest expense throughout your retirement. But good news, if you take advantage of some simple retirement tax planning strategies now, it could lead you to a windfall of tax savings in retirement. So the tax rates today are at 40-year lows, the lowest in 40 years. But with a record high national debt and all the other financial troubles in Washington, it's not a matter of if taxes go up, it's really a matter of when. But good news, you have an opportunity right now, though, to convert pre-tax dollars in your IRA, 401ks, and other qualified accounts into tax-free Roth accounts. Now, this helps protect you from higher future taxes and has even more tax savings benefits because you don't pay taxes on the future growth. Even if stocks were to see significant gains over the years to come, You don't want to wait around for this because you could get that benefit of compounding interest tax-free. When you take advantage of the tax cuts that we have in place currently this year and what they may evolve into. So take advantage of those. And if President Trump keeps taxes lower for longer, we can use that to our advantage. But sooner is better to take action. The only opportunity that you can take is the one that's in front of you. And you don't want to miss out on this one with 40-year lows. Now, next up, Social Security. Look, you've spent your entire working life contributing to Social Security, correct? And if you were to add up all the contributions you've made over the past 30, 40 plus years, it could probably make your IRA or 401k look like chump change. So I believe you owe it to yourself to ensure that you wring every nickel out of your benefits that are rightfully yours. You paid into it, but doing so, that's grown even more complicated nowadays. The traditional strategy to delay filing Social Security would yield a bigger benefits check for you. But if you're in your early 60s today, for instance, the trust fund could be nearly empty before you even collect on it, on your first check. The way the laws are written, that would lead to an automatic reduction in benefits on your Social Security benefits, unless Congress acts. 3 scary words there. According to Barron's, this would cost the average couple over $16,500 in Social Security income every year. And if you multiply that number by 5, 10, or even 20 plus years, you could end up costing yourself 6 figures of Social Security income that's rightfully yours. So it's important to consider Social Security in the context of your total retirement picture, including one other trapdoor, and that's the potential that you could trigger taxes on up to 85% of your Social Security benefits. So it's critical that you don't take this decision lightly. You need to consider the impact on not only your benefits, but the taxes on your benefits, the taxes on your IRA, 401k withdrawals, the taxes on your investment income. This is how you can ensure that you get the most net income from your Social Security. Again, you're the ones who paid into this, right? This might also be a good time to double check your portfolio, especially at the start of a new year, and your retirement plan, especially focused on the 3 buckets of cash, income, and growth. How much of your savings is kept in cash or cash-like investments, where it's as safe as possible from market volatility? How much of your savings is in income-generating vehicles? How much income do you need on top of what you may or may not get from Social Security? This is also a critical piece of the puzzle. And then, do you have money invested for growth that could help you stay ahead of inflation? Now there's a really good time to re-examine exactly where you stand, to make sure that you're comfortable with your various allocations going into a new year. These decisions should be customized to your personal circumstances and to your comfort levels. And I suggest that you should not accept anything less than to work with a team of fiduciary advisors who are obligated to put your best interest before anything else. And all that being said, if we zoom out in a way, looking at Trump's next term, doesn't really change your, retirement planning at all. The best financial game plan isn't built for the next 4 years. People are living longer than ever before. So your retirement could easily last 20, 30 plus years, even longer. So believe me, there will be more presidents and elections to come. There will be more crisis. There'll be more recessions, conflicts, and more risks than we can even see coming. But the good news, there are a lot more positive opportunities as well. So if you want to create a bulletproof financial retirement game plan for retirement, it's not about reacting to policies or changes of every administration and all the rumors. It's about building a long-term concrete plan with a system to ensure your financial security both now and through your entire retirement. Our team and I would love to help you by putting together our Goldstone Retirement Roadmap, a custom plan created just for you. So our custom Goldstone Retirement Roadmap addresses income planning, tax planning, healthcare, estate planning, legacy, investment planning, all those things together, minimizing taxes on your investments. We've helped thousands of families just like you, and we've seen just about every scenario under the sun. And we are incredibly confident that we can help you too. And the best part, there's no charge to get your customized Goldstone Retirement Roadmap. And when you have a strategy that tackles all these things, and they're all working together in conjunction together, the whole is greater. The sum of all parts working collectively is a great outcome. This is what could really make $500,000 work as if it were $1 million, or $1 million work as if it were $2 million. If you don't have a plan well thought out that's covering all these things, well, you're just hoping everything is going to work out. We're just hoping our way through retirement, and hope is not a great strategy. We'll show you how these strategies can work for you, and it's not going to cost you a dime. We figure that this is a bit of, the kind of show and tell. We can tell you all day long, but we'd like to show you what we can do for you. But it's far more powerful for you to, see this with your own eyes. And so we'd love to take a look at your current situation, look at your numbers, look at your retirement, see what's possible for you as well. Take you from where you're at now and strengthen what you've done currently, strengthen the overall plan and make it even stronger than it is today. Fill in some of the gaps, check some of the boxes that maybe you aren't covering that we talked about here today with a complete plan. So go ahead and click the link we just shared on the screen here, or call the number on the screen. Request an intro call, a discovery call with our team of fiduciary advisors to get things started. Allow us the opportunity to show you specifically what we can do for you, and then you could decide if it's a good fit. Are we a good fit for you? Are you a good fit for us? But I will tell you, availability is limited. There's only so much time on our team's calendar because it takes a lot of time for our team to create a full customized plan like this, utilizing our expertise to create your very own Goldstone Retirement Roadmap to do this. And we have an in-house tax planning team headed up by an extremely talented CPA, an IRS enrolled agent, multiple CFPs with extensive knowledge on tax planning, CFPs with extensive knowledge on income planning, investment planning, estate planning. We'll put all this together for you, complimentary. So if you want to be one of the first people here today to request your appointment, go ahead. You can avoid the delays. Simply click the link on there that'll take you to our calendar, and we can begin the conversation, or call the number and we can speak with one of our team members as well, one of our fiduciary advisors. We typically work with families who have saved $1 million or more in their entire investment plan. But if you've saved more than $500,000 or more in your investment accounts, in your retirement accounts, $500,000 or more, simply click the link or call now to schedule a short discovery call with our team. 15 minutes, we'll begin that call, and we can kind of walk you through in a 15-minute short consult what creating your personalized custom Goldstone Retirement Roadmap looks like. Simply call the number at 630-366-1640. Again, you see on the screen there, 630-366-1640, or go ahead and click the link that we've shared there. But I get on the calendar if you could today, because it's not just the fact that our advisors do have limited times available, as we're trying to help as many families in the Chicagoland areas as possible in the surrounding states, but also you don't want to put off anything that's an essential planning like this for the next 4 years and beyond. Very important. I think this is a very good time as we start the new year to begin having a concrete plan. Again, helping you take what you've already done, and fill in the gaps, make that plan even stronger to start the new year. Thanks again for taking the time to join us today, and we're really looking forward to seeing you at the office or in a Zoom. Stay safe, be healthy, and we look forward to meeting with you soon. Take care.